The Rothschild brothers transformed a single coin-changing business in a Frankfurt ghetto into the most powerful banking empire the world had ever seen. They created financial innovations we still use today and accumulated wealth that once dwarfed entire nations. This is the true story of the Rothschild banking dynasty, a family whose name became synonymous with extraordinary financial success and conspiracy theories that persist to this day. In 1744, Mayer Amschel Rothschild was born into the cramped Jewish quarter of 18th century Frankfurt, Germany. His family lived in a house marked by a red shield, Rothschild in German, which gave the family its enduring name. When smallpox claimed both his parents just 11 years later, young Mayer couldn't have imagined his descendants would one day advise kings, finance wars, and create the blueprint for modern international banking. The Frankfurt ghetto of the 18th century imposed strict limitations. Jews were confined to a single street, forbidden from owning property outside its walls, and restricted in their choice of professions. Within these constraints, Mayer Amschel discovered an opportunity that changed everything. The complex art of money changing and currency exchange, operating as a court Jew or Hof-Jew to European nobility. By the 1760s, Mayer had established his banking business, initially dealing in rare coins and bills of exchange. His breakthrough came in 1769 when he gained the coveted title of court agent, managing the finances of Wilhelm I, Landgrave of Hesse-Kassel. This appointment opened doors to the European nobility and their constant need for capital to fund armies, territories, as in grand projects. Mayer Amschel's true genius lay not in his own success, but in his strategy for ensuring his family's lasting influence. Rather than keeping his wealth concentrated in Frankfurt, he deployed his 5 sons across Europe's major financial centers like pieces on a chessboard. Nathan established the London branch in 1798, initially settling in Manchester before founding N.M. Rothschild and Sons in London's financial district in 1811. James headed to Paris, Karl to Naples, Salomon to Vienna, while Amschel remained in Frankfurt. This geographic diversification was revolutionary. While competitors like Baring Brothers operated locally or regionally, the Rothschilds created Europe's first truly international financial network. They could move money, information, and influence across borders with unprecedented speed and efficiency. Their private courier system often delivered news faster than official government channels, a competitive advantage that proved invaluable when information meant power. The family's rise to prominence coincided with one of history's most tumultuous periods. The Napoleonic Wars had thrown European finances into chaos, creating massive demand for government bonds and military financing. By 1815, as the Congress of Vienna was reshaping Europe's political order, the Rothschilds were sophisticated enough to help finance Wellington's forces at the Battle of Waterloo. Contrary to persistent myths about Nathan profiting from inside knowledge of the battle's outcome, a story that didn't appear until 1846, 30 years after Waterloo and 10 years after Nathan's death. The family's real profits came from their legitimate financing of the British war effort. The scope of their operations in the 19th century defies modern comprehension. In 1818, Nathan arranged a £5 million loan to the Prussian government, equivalent to roughly £440 million in today's money. Much of their fortune came from trading British government bonds called consols, which became their specialty. From 1895 through 1907, the family loaned nearly $450 million to European governments, which translates to over $15 billion in 2024 purchasing power. As historian Niall Ferguson observed in 1999, for most of the 19th century, N.M. Rothschild was part of the biggest bank in the world, which dominated the international bond market. For a contemporary equivalent, one has to imagine a merger between Merrill Lynch, Morgan Stanley, J.P. Morgan Chase, and probably Goldman Sachs too. as well as the International Monetary Fund. Their influence extended far beyond lending money. The Rothschilds pioneered many practices that define modern finance. They standardized international bond markets, created sophisticated methods for currency hedging, and developed risk assessment techniques that banks still use today. During the Panic of 1825, when the Bank of England faced a liquidity crisis, it was the Rothschilds who supplied enough coin to prevent a complete collapse of the British financial system, demonstrating their crucial role in preventing financial disasters. The family's strategic acquisitions gave them near monopolistic control over critical commodities. In 1830, to settle a defaulted Spanish loan, they acquired rights to the Almadine mercury mines in southwestern Spain. Since mercury was essential for refining gold, this gave them significant influence over global gold markets. They later acquired the Rio Tinto copper mines and held the lease on the Royal Mint refinery, cementing their position at the center of precious metals trading. No institution better symbolized Rothschild dominance than the London gold fixing, established on September 12, 1919, during the era of the gold standard. Every business day, representatives of 5 major gold dealers gathered in a small paneled room at N.M. Rothschild and Sons' new court headquarters, watched over by portraits of European monarchs who had once been the bank's clients. Each representative sat at a desk equipped with a telephone and a small Union Jack flag. The Rothschild representative traditionally chaired these meetings, which set the global price of gold under the gold standard monetary system. The ritual itself was remarkably civilized. Representatives announced their buying or selling intentions while the chairman calculated a price that balanced supply and demand. When participants were satisfied, they lowered their flags, and the gold price was fixed for the day. Most fixings took only minutes, though during the 1986 stock market crash, one session lasted over 2 hours. This system continued for 85 years until Rothschild withdrew from commodities, trading in 2004, ending an era of direct involvement in gold pricing. Throughout the 19th and early 20th centuries, the Rothschilds maintained their dominance through careful strategic marriages, typically to first and second cousins, ensuring that wealth and knowledge remained within the family. They also cultivated relationships with European royalty and governments, becoming trusted advisors on fiscal policy and major financial transactions. The family's political influence was substantial, but often exaggerated in popular imagination. Lionel de Rothschild became the first Jewish member of the British House of Commons in 1858, and Alfred de Rothschild served as a director of the Bank of England. When British Prime Minister Benjamin Disraeli needed £4 million in 1875 to purchase Egypt's shares in the Suez Canal, it was Lionel Rothschild who provided the emergency financing, giving Britain control over this crucial trade route. However, the 20th century brought challenges that gradually diminished Rothschild dominance. World wars disrupted international finance. The rise of joint stock commercial banks created new competition, and changing government policies reduced opportunities for private financial houses. The Austrian branch was seized by the Nazis in 1938, and the French socialist government nationalized Banque Rothschild in 1981, renaming it Compagnie Européenne de Banque. The family adapted by diversifying beyond traditional banking. Lord Jacob Rothschild, who died in February 2024 at age 87, exemplified this evolution. While maintaining financial interests through RIT Capital Partners, one of London's largest investment trusts with assets worth about £2 billion, he also became a prominent cultural philanthropist. He chaired the National Gallery from 1985 to 1991, led the National Heritage Memorial Fund, and oversaw the Heritage Lottery Fund's distribution of £1.2 billion to British cultural institutions. Today's Rothschild operations are far more modest than their 19th century peak, though still significant. Rothschild & Co., the merged British-French entity, manages approximately 124 billion euros in assets and completed 351 mergers and acquisitions transactions in 2024, more than any other independent advisory firm. Their Five Arrows division manages 28 billion euros across private equity and private credit strategies, while the separate Swiss Edmond de Rothschild Group oversees 184 billion Swiss francs in assets. In 2023, the family took the bold step of privatizing Rothschild & Co., delisting it from the Paris Stock Exchange through a tender offer that secured 96% ownership. This move, backed by other prominent European families, including the Dassaults, Peugeots, and Wertheimers, was explicitly designed to maintain the family character of the company and protect itself from any attempt at a hostile takeover. Despite their reduced influence, the Rothschild name continues to attract conspiracy theories that often carry anti-Semitic undertones. These narratives can be traced to an 1846 pamphlet called Histoire édifiante et curieuse de Rothschild, Premier Roi des Juifs, written by Georges d'Arenvael under the pseudonym Satan. This anonymous work falsely claimed that Nathan Rothschild had advanced knowledge of Waterloo's outcome and created many myths that persist today. Modern conspiracy theories wildly inflate Rothschild wealth, with some claiming they controlled $20 trillion or more. In reality, credible estimates place the family's combined wealth between $400 and $500 billion, still enormous but far from controlling global finance. The wealth has been divided among hundreds of descendants across 7 generations, much of it held in private companies, trusts, and real estate that resist precise valuation. As historian Paul Johnson noted, the Rothschilds are elusive. There's no book about them that's both revealing and accurate. Libraries of nonsense have been written about them. This elusiveness has unfortunately fed conspiracy theories while obscuring their genuine historical significance. The family's actual legacy lies not in controlling world finance, which they demonstrably do not, but in innovations that shaped modern banking. They pioneered international financial markets and created sophisticated risk management techniques and demonstrated how information networks could create competitive advantages in global trade. Their emphasis on family partnerships, geographic diversification, and long-term relationships became standard practices throughout the financial industry. The Rothschild story illustrates both the possibilities and limitations of financial power. At their peak in the mid-19th century, they wielded influence comparable to nation-states, helping to fund government bonds, stabilize currencies, and finance major infrastructure projects. Yet their dominance proved temporary, undermined by changing technology, growing government regulation, and the rise of larger institutional competitors. Today, as Alexandre de Rothschild leads the firm's operations across more than 60 offices in 40 countries, the family continues adapting to new realities. They remain significant players in mergers and acquisitions advisory, wealth management, and private banking, but they operate in a financial landscape they no longer dominate. The Rothschild banking system that once seemed inescapable has evolved into something more modest. A respected advisory firm serving wealthy clients and mid-market companies, while the family pursues philanthropy, winemaking, and cultural preservation. Their story serves as a fascinating case study in how financial empires rise, peak, and ultimately transform themselves to survive in changing times. Understanding the true Rothschild legacy, separated from both wild conspiracy theories and uncritical admiration, Etty offers valuable insights into the evolution of international finance and the complex relationship between wealth, power, and influence in the modern world.